Welcome to The Point of View. This is your favorite current affairs show on television. Here on The Point of View, we pick the right topics, we get the right guests, and ask them relevant questions on issues that matter to you. There's a big controversy in Ghana. The government signed a deal with a company to exploit lithium, which is an important component of the electronic vehicle supply or value chain. The IEA and a number of people have spoken against the agreement, but earlier today, two highly respected technocrats wrote an article in defense of the agreement and suggesting a few amendments. Tonight we'll look at the key issues around the agreement, what the two technocrats have said, and also speak to two of the key people against the agreement. Dr. John Kwakye, who is the head of research of IEA and former Chief Justice and a distinguished fellow of IEA in the person of former CJ Justice Sophia Akuffo. We'll be right back. Welcome back. So tonight we are going to delve into a controversy around Government of Ghana's agreement with a company called Berari DV. They signed a lease agreement to exploit lithium in the Ewoya concession in the central region. This has led to a lot of controversy. Professor Ransford Jampo has written about this on his Facebook page, as has the IEA. Indeed, the IEA on 28th November issued a press statement where they criticized the deal and described it as not different from the colonial era agreements that have impoverished the country. We will go to the IEA to speak to them about why they are so against this deal. But there's an article that has been written by founding CEO of the Minerals Commission, Kofi Ansah, and one of possibly Ghana's best extractive lawyer, Fuichi Kata Senior, seeking to essentially tidy up the discussion around the controversy, and I'll tell you what they did shortly. So why is lithium important? Lithium is described as one of the new minerals that play a key role in the electronic vehicle value chain. So I'm going to show you what the electronic vehicle value chain is, right? Now, the electronic vehicles are the new vehicles that are charged by what is called lithium-ion batteries. These are the most popular batteries for electronic vehicles. They are light, they are small, they store a lot of energy. So if you have an electronic vehicle, you don't need to use petrol or diesel. All right. Now, this lithium-ion battery or other batteries are the most valuable component of the electronic vehicle. In fact, 40% of the total value of an electronic vehicle is the battery. China, Japan, and Korea dominate the EV battery market. And about 96% of the supply is from those three countries, right? For example, China had 93 mega factories for batteries, all right? That's an interesting point because this deal that the government has signed is the first an African country has signed with a non-China type of economy. So the company in question is Berari DV, which is the subsidiary of Atlantic Lithium, which is an Australian-based company, all right? Let me show you the electronic vehicle supply chain quickly, because that will go a long way to explain why this controversy is important. So the electronic vehicle on your right is powered by a battery, of which I said to you the lithium ion is the most popular. And the lithium ion battery is assembled, and it's a $1.18 trillion industry by 2025. The EV industry itself is 7 trillion plus, all right? But it starts from mining these precious minerals. So you have nickel, you have cobalt, and you have lithium, all right? And the companies that produce this are Glencore, Nornickel, and the other companies listed down there. Now, the market value is a bit above $10 billion of the mining itself, the raw mining. This is very similar to most minerals. Cocoa is the same thing. By the time you leave raw cocoa to chocolate, it moves from billion to $1 trillion. So Africa currently focuses on the mining of the mineral, and then to an extent the refining. All right, so the smelting and the refining, but that's just 44 billion American dollars. The third component in the value chain is called the precursor production. Now, the precursor is what is called an ingredient of a cathode. Now, a cathode, this is science now, a cathode is a unit of a battery. Okay, we have anodes and cathodes. Now, the precursor market is $271 billion. And look at the companies there. Johnson Matthey and Sumitomo, Japanese company. By the way, the metals, smelting and refinery, the companies there, a number of them Chinese, Japanese, Korean, and BHP. So you have the mining, which is where the lithium we are mining is. This is just the basic. You have the metals, you have the precursor, and then you have the cell production, the basic unit of the battery, the cell production. BASF and Umicore are some of the leading producers. Now that jumps from 271 to $387 billion in terms of value. Then you move from that to the assembly itself, which is another 1.18 trillion. And then you have the electronic vehicle itself, which is now over 7 trillion, right? So all the raw materials after being mined are typically sent to China, South Korea, or Japan for refinement. So everything from metals to production, all of this is mostly done in Japan, South Korea, or China, all right, to produce the cathodes and the cells, all right. Now, Ghana has found commercial deposits of lithium in a place called Ewoya, all right. And lithium has a lot of potential. Let me show you this chart from Bloomberg, which tells you the current state of play in Africa of these metals and the rate of potential growth of these metals. So if you take, for example, cobalt, all right, cobalt, DR Congo dominates in cobalt production for Africa. They produce about 51% of the proven reserves. They have 51% of the proven reserves. The projected global annual demand from energy technologies for cobalt is 460%. That's a lot, all right? You have bauxite. Ghana does have some bauxite, but Guinea is the main player here. They produce 25% of the proven reserves, but the growth is only 9%. Copper, 7%. Graphite, 494% growth. Now, lithium is big because lithium, as of 2018, Zimbabwe was the only country producing lithium. Look at the projected global annual demand. Comparing 2018 production, 488% growth. So lithium is massive because, as I said, lithium-ion batteries are the most popular form of EV batteries. So it's a massive thing. And so Ghana finding lithium in commercial quantities is big. Now, this company has been, we are told, prospecting for years and has finally come to an agreement with the government of Ghana. There's also manganese and vanadium. All right. So what are the concerns? IEA basically is saying, number one, the deal must go to Parliament. Number two, the type of arrangement focuses just on fiscals. It does not focus on the value chain. Go to the previous slide. It doesn't focus enough on all the things that we've said. It just focuses on mining the raw lithium. So basically, IEA is saying we are playing in the first, column, when we should be playing throughout the value chain. So they don't agree with the deal in its present form because it's going to keep us poor. All right. They are also saying we don't. The type of agreement we went into, the so-called lease agreement, is not the best. IEA says we should have gone into a service contract or a joint venture, and they also have other things. Professor Jampo also went on to say, and he wrote a separate article, that this agreement that has been signed with the two companies, or with Berari, between government and Berari, gives about 13% of our lithium proceeds to us and 87% to foreigners, right? And that this is not good. So Kofi Ansan, who is the founding CEO of the Minerals Commission, he's no longer the CEO of the Minerals Commission. I think he left the job in 1999. And Fuichi Kata, the foremost Ghanaian lawyer when it comes to extractives, have written a 4-page article. And they take issue with a number of things. Now, they have two suggestions for the government. They are saying that the deal can be better, but they are not against the deal. And they have two suggestions for the government, right? And those two suggestions are very simple. They are saying that, look, we need to beef up how we price the lithium that we produce. We should probably have an agreement with the company that will help us to get the right price for the lithium and ensure that it's sold at the right price, so that every revenue you get from lithium will be based on the price that the useful part is sold. So government should engage a commodities research company to regularly provide the prices, both open market prices and also contract prices if possible, and to have a side agreement possibly with the company to provide for the engagement of an independent and reputable company to write regular current prices. So they are saying, government, whatever you do, make sure you get the price right. So that's their first suggestion to the government. So in a sense, you can say it's a criticism, but they are not saying throw away the deal. They are saying tighten your pricing. Second point they make has to do with tightening the agreement to insist that the lithium we produce is part of a value chain of downstream conversion. So basically, don't produce raw lithium and just sell it. All right, develop it in Ghana, convert it into concentrate, and also put that in the law. If you can't put up a conversion factory, put something in the law to insist that the lithium can be sold to a Ghanaian company or a company producing in Ghana. It's like oil. You go to Jubilee Field to produce crude oil. Don't export it raw. Either give it to Tor to refine or set up your own refinery. That's what they're saying. So Kofi Ansah and Fuichi Kata say government should be more precise about setting up a plant to process the lithium. Government could be more precise in setting up a plant to process the lithium, right? And they are basically saying that it should be made clearer that the obligation is to make the concentrate available in Ghana or to any Ghana plant in terms no less clearer than they would give to other countries, right? So that's what they're saying. This is an important step along the path of achieving value addition. So Kofi and Fui are not against value addition, but their main argument is to correct wrong calculations and wrong assumptions around the value we will get financially. So let me turn to those. Now, essentially, they are saying that Professor Jampo, who is a well-known political scientist, and the IEA commit a fundamental error in their criticism of the contract. So they're saying, for example, the IEA, backed by former CJ Ms. Akuffo, who will be speaking to shortly, have contended that a joint venture agreement or a service contract is preferred to a mining lease or a concession, which they characterize as a colonial form. According to Kofi Ansah and Fui, there are fundamental flaws in the methods used by both in arriving at that conclusion. They deal with the issue of joint venture versus service contract. They also say the assumption that we are going to get $200 or $24 billion from lithium is not correct. The maximum we are going to get is 688 based on the assumptions that the company gives us. So they deal with that. So let's deal with that criticism first of the Jampo. So for example, says we are going to get only 13% of the value of lithium and the rest is going to a foreign company. They say no. Jampo is in error because if you look at the royalty of 10%, 1% levy, 35% corporate income tax, and 13% free carried interest, what government of Ghana will get is 51%, not 13%. So that's what they're saying. They're saying, Jampo, this your 13% is wrong. How did you calculate it? Based on all we know about calculating your fiscal or your revenue from the lithium, you have 13% and 87% completely wrong. It's 10% plus 1 plus 35 plus 13 on the revenue. So they're saying based on that calculation, government will get way more. All right, so that's the main point they make to Jampo. The other point has to do with the calculation of the $24 billion assumption. Again, they take extreme lengths to differentiate between the bulk lithium and the usable lithium. And based on their calculation, we are not going to get even up to $1 billion. So they want us to be measured and accurate in that. All right. Then the third issue they deal with is what the CJ calls the preference for JV or service contract. Again, they're saying that, look, a joint venture can be worse than a lease depending on its terms. So don't say every joint venture or every service contract is better than a lease or concession. The devil is in the details. So basically they're accusing the former CJ of of making an argument that emphasizes on form over substance. So they said, as for the arguments relating to JV and service contracts, making express the implication that they are inherently better than leases, make the error clear. The proposition does not even attempt to engage in a meaningful comparison of financial terms. It is, for instance, under the terms of a service contract, government pays the contractor 60 and the mining revenue retains 40. This is less beneficial than a concession. So they're saying, don't give a devil a bad name to hang it, or don't give the dog a bad name to hang it. Go into the details. So these and other comments are what I carry to the IEA to get a response from, because Professor John Kwakye and former Chief Justice Sophia Akuffo are the lead faces of the IEA criticism. IEA is saying this contract is not good for Ghana, and they give the reasons. So I'm going to go back to them to say, look, two of the most respected minds in the mineral community in Africa are saying some of your assumptions are wrong, some of your calculations are wrong. They do think the contract needs to be tidied up, but they don't agree with you when you say the contract should be completely thrown away or rejected by Parliament. They believe there are a lot of good things in the deal, and in the circumstance, they need to point that out, right? So those two gentlemen have really set the discussion going. Mind you, Imani's Bright Simmons agrees with IEA because he's written quite a lot on this. And he also says the current deal between government of Ghana and Berari should not be passed by Parliament. And I will not deal with Bryce Simmons today, but Bryce Simmons' argument is very similar to IEA and provides more details. So you have Bryce Simmons and IEA and Jampo on one hand, all saying that this deal is not in the interest of Ghana. And then you have Kofi Ansah and you have Fuichi Kata saying, in the circumstance, on a fiscal point of view, this is good. All right? So when we come back, we're going to talk to the IEA on why they are so skeptical about this. And then we're going to confront them with the arguments of these two gentlemen who have over 35 years each in the mining sector. So that's the menu for the day. This is the point of view. When we come back, we'll talk to the two IEA leaders. Stay with us.
We're all more than just one thing. Like Grace here, the best teacher ever. She tries hard. When you're in front, of course, you have a following. While at home, she has a following that is sometimes harder to impress. Well, Minister of Home Finance, we're impressed. That's why we offer every kind of banking solution for every kind of you.
This Christmas, Pediasip Valley Resort brings you the sweet Menja experience. Come in, have a feel, and let's treat you like the royalty you are. With the best amenities we have to offer, from our exquisite suites to our luscious dishes, well-stocked bars, and reliable staff, we are ever ready to serve you. Relive the journey of the wise men at Pediasip Valley Resort and Mini Zoo. Come with family and friends from the 24th of December till the 4th of January, as we have a series of delightful events that will leave you with lasting memories and a joyful heart. For reservations and general enquiries, call 0540-125-555 or 0540-125-554. Pediasip Valley Resort. Live life.
I've come back to speak to the Director of Research of the IEA, Dr. John Kwakye. I consider him their lead on economics. He is the one who speaks to us on most of the economics issues. Doc, it's good to have you. Thanks for joining us.
Thank you.
We also have a distinguished fellow of the IEA, happy to say, former CJ, Justice Sophia Akuffo. Thanks for joining us. I must say, I'm happy that we are getting to talk to a CJ in any capacity, because it's not been very common for media to get to speak to you at all, and you've been speaking on a number of topical issues, and I need to commend you for that. Any reason why these days you've spoken more regularly to media?
Because now I'm a private citizen. That's all I can say. All these years I've been a public citizen in a sector of the nation where silence is golden. And so I am now a private citizen.
And how are you finding that experience? I've heard you talk about, for example, the debt exchange. You've spoken about very important national issues, some of which have generated different kinds of reaction. How are you adjusting to that aspect of public discourse?
I speak not because I want to get embroiled in any public matter. I speak on things that need to be spoken about. I think that's really the only thing that's motivating me. I don't want to jump into anybody's affray. And if what I say causes an affray, then I'm prepared to continue speaking on that matter because I speak out of conviction and out of principle.
And in this particular case, being a distinguished fellow of the Institute, I've heard you give comments. What's the role? What does it mean? Is it like you give lectures every season? Or what's when the distinguished fellow of a think tank, what does that mean?
We do various types of research. We've been working on the constitutional review program, which we have a whole center on constitutional review here. And most of us who are here have worked on one aspect or the other. I've worked on the constitution and the judiciary, how we can improve the things. And I made certain recommendations, yes. I chair some of the Institute's programs, and that's what a think tank does. And I'm still doing some research on aging, not on scientific aging, but on aging from the legal point of view, the aged and the low. That's an area which the African Union actually has a protocol on it, which Ghana is yet to ratify. And I've been asking people who will listen to me, why have we not ratified it? Normally we are in such a hurry to ratify practically everything. This protocol on aging, on the aged, was adopted by the African Union as far back as 2016, but Ghana has not yet ratified it. Wow. And I wonder why.
I can sense the difference because as a justice of the Supreme Court and CJ, you are the interpreter of the law in action, but now from a policy angle, you are able to reflect from outside, suggest changes. I'm sure it's almost like using a different part of your mind now.
Well, some of these may have been things that had been agitating my mind over the years, and one might have been mulling over it, and so now we talk about it, because if it's, for example, a mining agreement, it comes before you as a given.
Of course.
And you look at the law, you look at the facts, and then you decide. But in this case, now one can also talk about what ought to be rather than just what is.
Wonderful. Let me come to as for you, we've been talking to you for a long time. Yeah. In your premise to your statement, the IEA has said you've been supportive of the call by the president for Ghana Beyond Aid. And so this is not the first time you comment on an economic issue. But there have been mining agreements in the past that we've not seen the IEA make direct comments on. So I think it's important to ask, why is the lithium mining lease agreement between the government of Ghana and Barari DV of particular interest to the Institute?
Well, as we stated in our presentation, we have been working in the area, natural resources, for a long time. But maybe we've not come out so much into the open. We have been concerned about our mining fiscal regimes. We've commented on them that they've not been favorable to us and all that. But of course, this is the latest one which has come up. So naturally, of course, it whipped our appetite to the maximum, and therefore we said, no, this cannot be right. We cannot continue along the same lines that we've been doing, especially when, as we said, we support the president's idea, vision, that we should try and position Ghana beyond aid. But you cannot achieve that if you continue to give your natural resource away, cheaply. Now, we believe that Ghana is not poor. We are rich. In fact, we have compiled, we've got data from various sources. In fact, the IEA, the CIA, has database on some of our minerals, natural resources, the tonnage, underground. And then if you take them, you add them up, you multiply by the prices, the world prices. We came up with a figure that was more than $10 trillion. Our minerals together. We have gold.
Still in the ground.
Yeah, still underground. We have gold. We have manganese. We have diamond. We have bauxite. We have uranium. We have now lithium. We have copper. We have iron ore. We have gas. We have oil. I'm not sure that there's any other country in this world that God has endowed with so much natural resources. We are sitting on it. And then up here, we say we are poor. And then we have to run to the IMF to ask for just $3 billion spread over 3 years. And they impose all kinds of conditions on us. You can't do this, you can't do that. Is that what we want?
So let's deal with that. The point you just made suggests that we have money enough to invest in the exploitation of lithium. Indeed, in your write-up, you suggest that the Republic should set up the Ghana Lithium Company to develop the entire value chain from mining raw lithium to manufacture of batteries. I think that the main riposte we get from politicians or people who manage the country is that you need to capitalize it. If you look at even our carried interest in some of the mining companies, even in Vodafone, we have not really put money where our mouth is. So government is very passive. They have a nominal shareholding, but when there's a call for money, they don't seem to have the cash flow. So from an economics point of view, why is that, and where will we get the money to set up this GLC?
So you're right. As an economist, I have also been concerned about the fact that we sit down and say we can't do this, we'll not be able to do this, and then the issue is that because we lack money, we lack resources. We don't lack resources. In fact, what we are talking about, that is still underground. In fact, it's come up. The Ministry of Natural Resources and then even the Minerals Commission, they always argue that, we don't have the capital to explore the mineral ourselves. That's why we have to bring in these companies in, so that they come and sink their own capital. And then when they do that, then they dictate the terms to us. Okay? Now, it's been suggested that our own geological survey, why can't we resource them on an annual basis? I expect that in the budget, we'll have a line item that says geological survey, takes so much. Let's resource them so that they can do the mapping of the data, mineral data for us, so that we don't have to rely on a foreign company coming in and saying, because I brought in my own capital, you have to accept these terms, royalties and so on. So we can find the money. In fact, we can use even part of our oil money, the funds that we have created, the stabilization fund, the heritage fund. Why can't we can dip into it?
But
use it?
I agree with you, but we also need to recognize that exploration for both oil and hard minerals is a very risky business. In fact, the data shows that less than 20% of explorations yield any find that leads to a mine. So for a country that still struggles to pay salaries, that has lots of people in poverty, the capital you need to invest in exploration is not readily available, which is why companies like Atlantic exist. So you need to agree that it's not just a question of we have the money, but it's a risky venture. So to commit public funds to exploring for whether it's oil or lithium for 10 years, will our parliament agree for monies of the amounts they spend to be used in exploring, which has 1 in 5 chance of yielding a mine? I think that's the question.
Yeah, but if it's risky, we should also take the risk. I mean, a lot of things in economic activities, there's some risk, even investment. There are risks involved. So you want somebody else to come and take the risk, but you don't want to do it yourself. I think that's the issue. And then you say we are not able to pay salaries, and so why are we not able to pay salaries? I'm saying that we have enough resources, and then, of course, if we have the right size of the public sector, and so I'm not saying that we should employ everybody and pay them. So the initial capital, and then once you have the resource on the ground and you have done the mapping, and then you know that at least there are some quantities, you can even use that as a guarantee or something to go and get the loan.
Madam, isn't that what most of those who come and do the exploration, isn't that what they do? After they've got the results and the mapping, then you go and you leverage it on the money market. Yes. And that is why you look at the agreement, references are made to Atlantic. How do they come in? Now, you go on Atlantic's website, and then you see that they were already leveraging what they had found. They were already leveraging what they had found on the market, already selling 50%, promising 50% of the raw product to a third party for production and refinement in another country. Jobs outside Ghana, which should have been done.
But they invested
here.
10 years in exploration.
Using
money they raised. That's their business model. So I think the question we need to address is, how do countries like Ghana get money that is called risk capital? How do you get risk capital?
What do you mean by countries like Ghana? What is Ghana like?
Of course, you know our economic situation we're in.
And why?
Yeah.
But we are dealing with a specific issue now. We can discuss the history of Ghana's economic development. I'm happy to do that. What I'm just saying is that we've just gone to the IMF because you're already indebted to international capital that you can't pay.
Yeah.
Now, you are talking about commercial lending for risk exploration. Yeah. So whilst I'm not saying I agree that Ghana should not invest in exploration, I'm pointing out a reality of the way capital works in our current world. That it's almost impossible for a country to commit public funds to risky mining exploration, which is why companies like Atlantis exist.
Yeah, and then, so the alternative also that people have suggested is that you can agree with the company that I don't have the initial capital, so you come and do the exploration. It will cost you, so much. And then after they've discovered it, you agree with them that you'll pay them back their costs over time. You see, what we want is that we want to take ownership of our mineral. That's our fundamental, issue. We want to own the mineral. So even if they come and exploit it, we will pay them their cost and then contract them to mine it for us and pay them again for their cost of mining it, plus a profit margin. Of course, you say that if you do that, many companies may not come, okay? Mm-hmm. If they may not come, let's leave the lithium underground. Why the rush to mine it? The minister has 1 more year to leave office, okay? Why is he rushing with this agreement? Let's leave it underground. until we are.
But is it
fair
to say it's rushing if I've just told you that
Yes.
there's been work done for the past 10 years?
Please.
So it's not. Is there no history of this transaction prior to this minister?
No, these arguments, they will tell you we've been doing it for so many. You ask Bank of Ghana, why are you putting up this mansion now? They say, oh, this thing has been on their efforts for a long time. They always make that kind of argument.
All right.
Look, he has 1 year to leave office. Let's take our time to do it well. Okay?
Fair enough.
Yes.
And our point also is that, yes, it's been done before. Yes, for the past 10 years, there's been research, the exploration going on, and so on. During those 10 years, we've had the opportunity to continue to improve on how we exploit our natural resources. It didn't have to be lithium. It could be something else. It could still be a new gold area. The important thing is that is this Gettysburg colonial framework the only shape Ghana can fit into? Is it because we are kind of rectangular in shape, so we must always have those funny angles? No. We should be exploring. Each year we should be looking at what others in a similar situation in terms of resource availability, resource findings, what they are doing. That is what we are saying. So we don't have to go back into the royalties. Let's talk about this. Gold, bauxite, oil, diamonds. Those are what we call traditional. Yes. All these have been since your grandfather was a baby. And with all these, we've been, since we became independent, we've been going to IMF, borrowing. We've been going borrowing with all kinds of terms. And we ask ourselves, there's this adage that if you're doing the same thing, don't expect another result. If this is how you're going to continue to exploit and extract your natural resources, don't expect ever being free of IMF. It becomes like a cyclical malaria. So malaria season, so you get malaria, you take medicine.
I get a sense both of you are questioning the excessive focus on the fiscal alone, where they talk about royalties. But I just wanted to point out to you that our aggregate take from mining, on average, through the four main means. So you have royalties, carried interest, VAT, duties and levies and other taxes, has been between 30 and 50%. So financially, money does come in. I do understand that value chain development is an issue, job creation is an issue, and other issues. But if we don't see development from mining, it cannot be for just poor fiscal terms. Because I'm just, based on what we've read, fiscally, we do get money. Whether the government manages it well or not is a different issue. Whether we've learned how to manage the mines is a different issue. But I'm just saying to you that fiscally, it's not been that terrible over the past 5 decades or more.
Ben, I'm not sure. I'm not sure of that. When you add those percentages and you say that they come to
royalties, carried interest, VAT, duties, levies, and other taxes.
I'm not sure of that. And then, in the first place, you see that I want to know what is the base for calculating. I mean, those percentages. You see, if it is on revenue, which revenue is it from the raw lithium?
So the point I make was on general. What I said was a general point. So let's come to what you're saying.
So those percentages, I want to know what is the base for calculating them. Okay, if it is at the base of the raw material, which has very low value, do you get me? Then you don't get much. But if it is on the final product,
Yeah.
you get me?
Get a
For
lot.
instance, cocoa is a typical example. Cocoa, the raw cocoa market, world market, is worth $10 billion. Meanwhile, the chocolate market is worth over $100 billion. Do you get me? So if you are taxing somebody at the level of the raw material, you are not getting much. Are you going to track him all the way to the final product? Before you tax him, you put the tax or levy. Are you going to put it on the higher final product or on the lower raw material?
So you're saying
yes,
we should not just look at the overall raw material and say we got 30% fiscally. We should look at the whole value chain.
Exactly.
Which we agree
because he's
with.
taking it away.
Which on based on all the economics we were taught in the base, we agree with that.
Yes.
That the more value you add, the more you can get from a resource.
Yes.
Which is fine. But I'm limiting myself to the discussion around lithium today because you just asked for a basis. So there's also a question for you. That in your analysis, you said that we could get about $24 billion per annum. And Kofi and Fuchikata wrote an article this morning, and they want me to ask you how you arrived at that, because based on their calculation, on average, we are getting about $688 million per annum.
Yeah.
Not the $24 billion that you arrived at. So would you be so kind to explain to us how you got that 24 billion USD per annum?
Yeah, but based on their calculation, of course, when you do a calculation, you have inputs to get to the final figure. And also, we also have our inputs. Now, what we did was we just took the Minerals Commission on air. The CEO said the total tonnage per year was 160,000. In fact, after his speech, I think other figures have come up. But that was the initial figure we got from him. So you take the 160,000 tons, metric tons per year, okay? Then from the internet, we got a multiple factor. You see, we took it all the way to lithium carbonate. So it's not just at the lithium level. So we brought in this multiple factor, it's a 5.3. Exactly. To get to a lithium carbonate. Then we took the lithium carbonate price, price per tonnage, and we multiply it. Okay? So I'm talking about 160,000 times 5.323 times 29,000 US dollars. That's when we arrived at the 24 billion US dollars. That's per annum. Now, if you multiply by the 12-year period, 10 of the agreement of the mining, you get 296. Is that what we got?
Yes. So you got Yes, you got 296.
Yes. Now, they must also tell us
for the 12 years.
Yes, they must also tell us which figures they use.
They did actually, and they use the same thing. The reason I'm asking this is that
we took it to lithium carbonate.
I get you, but you see,
did they go that far?
This is the difference. So I think, and not to speak for some of the article speaks for itself, but I think for the sake of the public, they basically said that the main product from the project which will be exported is something called spodumene concentrate. And that the grade of this material is normally measured in industry terms of the proportion of the lithium oxide it contains, rather than in terms of the pure lithium metal. And they are saying that the AOR feasibility report indicates that half the spodumene concentrate to be exported will contain 6% of the lithium oxide. Therefore, you multiply the 160,000 tons by 0.06 to get 9,600 tons a year. That was the figure they used, and they used a conversion factor of 2.473, meaning 1 ton of lithium oxide equivalent to 2.473. When they did that calculation based on your 160,000, they arrived at the 688 million per annum, not the 24 billion.
Did they get as far as lithium carbonate?
The carbonate, yes.
On the sheet of paper, they did not.
That's what, So we were arguing that we should take possession of our lithium and refine it all the way to lithium carbonate. This is how much we will get. In any case, we are not owning it. So it is the company, Berari, that is going to gain that much. That was, I mean, where we were coming from.
So that's the difference. Because, for example, $24 billion,
yes.
You know our GDP is about $80 billion.
Yes.
So if you're going to get $24 billion per year
yes.
from anything,
yes.
that is huge.
Yeah, but yes, but it should be, yes.
But I'm saying, but do you not question, and I'll come to the law, if you have an $80 billion economy,
yes.
An exploration that will yield you $24 billion in a year, is it realistic?
Ben, sorry. I mean, why not? I told you that we have figures that are saying that we are sitting on $10 trillion of natural resource wealth underneath us. How about, don't you believe that? But how about that? We have a lot of resources. We were taking it all the way to lithium. But by the way, Ben, here, don't let us argue about these figures.
No.
You know, we are not really the figures. Even we have come by new figures, which are saying that the tonnage is 168,000. Yes, we have come across 350,000. In the Atlantic Lithium and the documents, we've come across 350,000 now. So look, don't let us
split hairs
about these figures.
Yes, you know, because there are some figures.
Yeah,
I hope you have it.
New figures.
Because that's from the internet.
Yes,
on the definitive the feasibility study.
Yes.
That is being bandied about concerning this particular, because the heading is what? Ewoya project, lithium project, Ghana. You Google it and you will get all these figures. And these are the figures that are being bandied about by Atlantic and the third party, Piedmont. Yes. So, and the other thing we shouldn't forget, because my colleague mentioned the fact that there's cocoa, and then it's made into chocolate. Beyond chocolate, and in fact between cocoa and chocolate, are other products of great value that also come from the raw cocoa. It's the same with
lithium.
Spodumene. Lithium is one of the things that come out of spodumene. But going on the internet, you know, I just Googled. I had never heard the word before, and it wasn't used in the agreement. But in reading about the agreement, I came upon this spodumene. It's an important lithium mineral in the production of ceramics, enamel, glass, and then it goes on to transparent and highly colored varieties of spodumene are used in gemstones, and so on and so forth and all that. So there's all that as part of the possible value chain. There's all that as part of what could be produced as byproducts in Ghana, by Ghanaians, for Ghana.
All right.
What's wrong with that?
I will deal with legal issues when we come back.
Finally, anyone can become a household.
Oh, wow.
Yeah. You Go Flip, a real estate gaming platform that allows you to play and stand a chance of winning a house or cash or consolidated funds, such as savings towards a house. Simple and easy to play. Visit www.yougoflip.com. Buy a ticket to enter the game. Wait for the end of the game to enjoy the win. Anyone can win. Flip it or own it. You Go Flip. This advertisement
has been vetted and approved by the Gaming Commission of Ghana. Play responsibly, not for persons below 18 years, and gaming can be addictive.
Welcome back. So today we are trying to understand the controversy over the Ewoya lithium mining lease. And in the earlier part, we summarized the arguments of the two authors, or the co-authors of the latest article. But the discussion itself was triggered by the IEA's press conference 28th November and other interviews they've given. And I'm happy to say I have the two protagonists from the IEA here with me, former CJ and the Distinguished Fellow of IEA, Her Ladyship Justice Sophia Akuffo, and my very good friend, Dr. John Kwakye, who's the Director of Research at IEA. One of the issues they raised in reacting to your concern was your preference for what is called a JV or a service contract as against the lease or the concession. In the words of, and I suspect this is Fuichikata's words, the contention by the IEA and Mr. Akuffo that joint venture agreements or service contracts are better than leases or concession contracts suffers from the error of promoting form over substance. Then he elaborates, and let me just read the elaboration for your reaction. He says, as for the argument relating to joint ventures and service contracts, making express the implication that they are inherently better than leases makes the error clear. The proposition does not even attempt to engage in meaningful comparison of financial terms. If, for instance, under the terms of a service contract, government pays the contractor 60% of mining revenues and retains 40%, that would be less beneficial than in a concession contract in which the direct monetary benefits are 50-50 and vice versa. So that's the first argument in response to you. What do you say?
Once again, what are the base figures we're talking about? He's also plucking figures out of the air, as much as he's accusing the IEA of plucking figures out of the air. The point we are making is, and I will keep harping on and on and on. No one has been able to prove to, just as he wants proof from us, we also want proof that as compared to possible permutations of joint ventures or of service contracts, there is a greater benefit in this flat colonial formulation. Yes, it is not about form only, because the substance is that we are looking at full value chain exploitation. If indeed at the end of the line all we get as a nation is processing, and then processing and manufacturing, we are already on the downstream part and also getting money from it. We are providing employment. We are providing the other subsidiary and offshoot business activities that will come from having processed the spodumene, and then now we are, once you process it and you get your lithium oxide, there are also the other products that will be coming from it. It's like, I'll give you an example. When Ghana had a working refinery, I remember how in the 60s there were so many petroleum jelly-based activities that were also generated, so that they were made in Ghana pomades and cosmetics of all sorts. I grew up on those products. Now, everything is not available anymore because refining is not taking place on the same scale anymore. As soon as you're dealing only in raw material out of the country, finished product into your country, you've missed out on a massive opportunity.
Your Ladyship, I need to point out that they do agree with you on the need for value chain, which is why in their second paragraph they actually ask for the agreement to be tightened to reflect this. The difference in viewing JV service contract was more a question of the fiscal outcome, because their point is that if you have 11% carried interest, it can even be stretched to call it a JV. So they don't really think that's the main argument. But if you read them carefully, they actually say that the government should make the establishment of a plant to convert concentrate into lithium. They should lock that into the agreement. So on that point, they agree. If you read their statement, they're actually saying that nothing prevents the government to make it clearer and tighter, that even if we can't process initially, we should make sure the material is available for a local company that's processing. So I think there's a meeting of minds there. The question though was using JV and service contract and saying it's better than a lease agreement was where they picked issue. Because they're saying that it's a very broad, I mean, they're saying, for example, the term JV and service contract are so broad as to cover a multiplicity of mechanisms that make the proposition too vague to be meaningful. In any sense, any legal entity with more than one shareholder can be called a JV between the shareholders. So
we were not purporting to be the government's consultants, recommending to the government, do it this way, do it that way. All that we were pointing out is that there are so many, in fact, basically, that's what it is. There are so many variations, so many types, so many models, which somebody should do their homework to be able to be in a position to recommend a number that would suit Ghana with all the figures and all that. Yes, we were simply pointing out that this agreement, and I always find it uncomfortable when people are talking about lease agreements. A lease is an agreement. Not every agreement is a lease. A lease is a lease, and it's an agreement, but there's no need to say a lease agreement. This lease is no different from a concession agreement. Basically, that is what we are saying, and we are still saying.
But can a lease still have the development of the value chain within it? So my point is, the fact that it's a lease simpliciter does not necessarily preclude what you do with the explored or exploited mineral. So a lease gives the land and you use it for a number of years, but you can lock in the agreement who it should be sold to and what it should be used. And I think so my point is that it's not the defect is not it being a lease. The defect is it's not insisting on development of the value chain. That's the point I'm trying to make to you.
No. The defect is in simply relying on royalties and the same old formula, which certain people, including those who wrote that article, have stuck themselves to in the past and stuck Ghana to up to today, in terms of oil and in terms of other gold mining agreements. That is what it is. The point is, simply ask yourself the question, is this formulation of an agreement for the exploitation of our national wealth as good as it could ever possibly be? That is simply the question.
No, whilst not holding, I just want to say that the discussion has gone beyond these two. And also, when I read them carefully, what they've said is they actually ask that we should tighten the requirement for the development. So I just want to point that out for the record.
Okay.
But having said that, I'm coming back to you for a couple quick points as we try and move to a close. So on the fiscal side, your argument is that you can get as much fiscal as you can get, but it should not be limited to fiscal. So you're not against getting as much money, but you're saying get as much money, but develop the value chain too. Is that what you are saying?
Well, these differences, I don't know. But I'm happy that even here within IEA, there's a meeting of minds between legal and economics. I'm so happy that we don't seem to have any differences. Fundamentally, what we are saying is that our previous contracts, just like this one, are the concession type of contract. In other words, the company, you give them the land, the sea, and you say, if it's oil, exploit it, mine it, okay? Give me so much royalties. Give me 1% community development something. 1% growth and sustainability tax. I don't know even where that is coming from. You see, we are saying that we don't want that. We want to take ownership of our resource, okay? And then decide that, look, I want to contract you to mine it for me. At what cost? Tell me your cost. I pay you for your cost plus the profit margin. Yeah. Of course, then people say, oh, but they come and do the exploration, which you don't have money to do. Mm-hmm. That's the fundamental. Mm-hmm. Because if we had money to do it, this argument will not even arise.
Exactly.
So there's the issue first of resourcing our geological survey to start doing that. Okay? Right. We should, if they are not ready now, we should start resourcing them. And then we should maybe look for some of our funds, oil fund or something. We should be taking that risk of doing the exploration, GMPC or whoever, ourselves. We should also be taking that risk. We have some funds that we can use. The other one, the other alternative, which it may not be so palatable, is to get a company that is prepared to come and do the exploration, and then based on the fact that when they find the mineral and it costs them so much, you agree that you pay them back their cost over time. How about if they don't find it? That's another, they make a loss there. That one, you have to come into some kind of agreement with them as, how do we maybe even share the loss? Yeah. You get me? So there's a fundamental difference between what we are asking for. Yeah. We are saying that this is still a concession type of contract, notwithstanding how much you are giving to us in royalties. And they are saying that even if we ask for 20% royalties, no mining company will come to Ghana. Okay. That's what they are saying. Don't let them come.
I get the point.
Don't let them come.
So
we are not even asking for 60%
your point
royalties.
is not just for lithium and Ewoya. Mm-hmm. Your point is about exploiting natural resources going forward.
Yes.
Absolutely. So we should use this lithium as the first
a starting point.
Wonderful. Yeah. CJ, what about the Parliament? Then this is relation to the government. The minister held a press conference and said it will go to Parliament for ratification. And because I think the Supreme Court has decided that the matter has to go to Parliament. So
it's not only the Supreme Court. The Constitution requires that. So, and their own agreement requires that.
So we are okay with the fact that it will go. How confident are we that Parliament will have all the information and the appetite? I'm asking because we have a year to wrap up Parliament. A lot of the MPs are having primaries. Some are already on their way out. We need to also look at that reality of whether the Parliament itself is prepared to scrutinize the document as civil society is. Because we do know that Parliament has its own problems. So I'm just putting that.
Is that a legal question?
No, but it's a governance question.
It's a governance question. Which I'm glad you've asked it, and I'm throwing it to Parliament. That the people expect them to burn the midnight oil, burn the candle from both ends, to understand the agreement and not do the usual rubber stamping and just presenting the nation with a fait accompli. They make a lot of noise, and then in the end, they pass it. That is what it is.
My only fear is that the government could still use their single majority.
It's one person majority.
Exactly. to get it done. That is my only fear. Because no matter what, we cannot stop that if they still use their single majority.
Yeah, but when you say it's done, the agreement, so it's just a point.
Yeah.
There are many proposed changes. For example, I've pointed out to you 2 areas of change that Kofi and Fui suggest, and there are many other suggestions. So the agreement may get to Parliament in a different form, or it may come out of Parliament in a different form than we have seen.
Course, we expect.
So I'm not sure if you're saying that the agreement should be rejected completely
as it is.
So as it is, it should be rejected completely.
It should not be ratified.
But if there are amendments that, for example, include some value chain development that is ingrained in law, issues around pricing that they raise in terms of making sure we have the right price, issues about how the company sells it, it should be at arm's length. All these matters are addressed. There could be space for agreeing to it based on the final document, I suppose.
The devil
is in the detail.
The devil is always in the details. And the thing is, a contract doesn't have to have a particular form. What matters is that for the purposes of the IEA, the final product, if they still want somebody to come and do things, fine. But what the person can take away, and so on and so forth, all those things, the people of Ghana need to know, and need to have to have seen a full discussion of that, and we also need to see that at the end of the day, the value chain is long in and within the shores of Ghana, and in fact should be complete value chain, whereby when we start manufacturing electric vehicles here, we're not going to import the batteries from outside, but they will be available and manufactured here.
I think that's a great place to end. Thank you very much, your ladyship, former CJ, particularly for your advocacy, and now on the wings of the IEA as a distinguished fellow. Thank you. It's good talking to you. Dr. John Kwakye, we've been talking a lot, and I'm sure we'll talk again soon on the economy. So this is the public sphere, and we have given a hearing to aspects of the debate. It continues on our network, but thanks for watching tonight's edition of The Point of View. We'll see you next time. Bye-bye. Particularly for your advocacy, and now on the wings of the IEA as a distinguished fellow. Thank you. It's good talking to you. Dr. John Kwakye, we've been talking a lot, and I'm sure we'll talk again soon on the economy. So this is the public sphere, and we have given a hearing to aspects of the debate. It continues on our network, but thanks for watching tonight's edition of The Point of View. We'll see you next time. Bye-bye.